up, guys? It's Brendan from Market Makers. What a deep red day Friday ended up being for equities. Guys, you won't believe some of these numbers. We need to pay attention to what's happening in the equities market because Bitcoin's tied so closely to it, okay? So the S&P off to its worst first 4 months of the year since 1939, the Great Depression. The NASDAQ off to its worst first 4 months of the year since 1971 when they started keeping records. So the NASDAQ had its worst individual month since November 2008, the great financial crisis, the housing bubble. This has been a crazy, crazy market, yet Bitcoin is still holding its bullish accumulation pattern here on the weekly in the ascending triangle. Fascinating, absolutely fascinating. So the Fed meets, by the way, May 3rd and 4th, 0.5 rate hike coming into the marketplace. That's part of the bloodbath that happened on Friday. But additionally, the GDP came in negative, minus 1.4%, solidly in negative territory. That's a quarterly report. That means if the next quarterly report for the GDP is negative, the USA is officially in a recession. So this, on top of that, we have an election cycle in November, and the party that is in power is well behind in the polls due to their gross incompetence and economic factors and other factors as well, obviously, for anybody that keeps track with politics. But they're facing a potential recession in the country, record high inflation, and now faltering markets. What is the Fed to do? Well, I'm going to give you my opinion of what's going to happen. My opinion is this 0.5 rate hike is now baked in that they're going to do next week because obviously we had the deep bloodletting on Friday. Amazon lost 15% in a day. So that's baked in. Now, what happens in June? I mean, what happens in June is over a month away, and it's going to largely depend on how these markets react. If they continue to roll down, I would not be surprised in this current environment to see the Fed turn more dovish, display their glass jaw that they have had historically had when it came to making tough decisions, came to making the right decisions, but you have to face the near-term pain. So maybe we get 0.5 in May, 0.5 in June, and then maybe no more rate hikes because the election's coming up. That new quarterly report will be coming out for the GDP. And again, it's all about looking at the recession, looking at everything from a political lens because the Fed, whether it wants to be independent or not, it's a political animal. Let's talk about Bitcoin and let's talk about the DXY. My last video, DXY Bitcoin Decoded. Guys, the DXY has not been at this level, which is at 103,928 here at its peak, since the dot-com crash. I need that to sink in for a minute, okay? Because this is a predictive indicator. Remember, general rule of thumb, strong US dollar, weak markets. And we are approaching a level, if we flip 104 and are able to use 104 as support and move up, you are at the highest level since the dot-com crash. That should give you a pretty good leading indicator of what to expect in the marketplace. And you guys that have been watching this channel know that I've been right on the ball. I talked about in the beginning of April. April's a traditionally bullish month. If you listen to the talking heads on the business news, this is a bullish month coming up with earnings, and these earnings should be good because we expect these companies to perform, yada, yada, yada. I told you it's going to be bloody. And bloody it has been. I predict the next couple of months, as long as the Fed attempts to do quantitative tightening, you're going to have bloodletting in the marketplace. Okay, so this is why it's so important to understand this, because if BTC can hold this bullish accumulation structure, I do anticipate, even though all the YouTubers are laying roses now at the grave, the tombstone of Bitcoin, I anticipate a rally to resistance, and it will be an ultimate trading opportunity if we fail to break that resistance. Let's look at this on the daily and get some realistic projections here. As you can see on the daily, we are in a falling wedge. Again, a bullish pattern. There's so many bullish patterns here. You have the higher low structure of Bitcoin. This structure is still intact, although it's getting close, but you are still intact for a high low structure. You have your three rising valleys pattern as well, and you have a falling wedge here on the daily time frame. Okay, now if this does start falling apart, if there is more blood in the water come Monday at market open, then you're looking at 37K for support. If you lose 37, guys, you're coming down to 34. And if you pull in your volume or your candles to keep this consistent December 4th, you can see the volume declination as you fall down. Right now, you're at this last peak of support. You see this peak sticking out here for volume, which is right at 37K. You have a demand line here, as you can see with this red dotted line. That's your last peak of support. You lose 37, you're going to 34. And if things turn bearish, more bearish than they are already, you lose 34, you're going into the 20s. Okay. And I'll keep you updated with that on some videos. But as of right now, you're still holding this bullish accumulation pattern. So I'm very interested to see where this rally could come up to. I've given you guys the Fibonacci target, so I'm using my Gann targets here today instead, looking at this a couple different ways. As you can see, the 233 is still descending, approaching 43K. It is right at about just under 44K now, so it's very slow. Same with the 200, was at 48,266, where we shorted this in the room on a trade and had this nice 20% move down, obviously. And now you can see the 200s moving more towards 46K. So here's my prediction. If we hold these bullish structures through the FOMC meeting, right? So Powell gives a speech, whatever. The markets are very oversold. Let me just pop over to NASDAQ and show you this. The NASDAQ is down 16%. A lot of the buying, something like 40% or more, is done with algorithms, right? This is funds going into the indexes. And remember, this is the longest bull market in the history of the stock market. These funds have been buying one direction. They've been buying the dip. Buying, buying, buying. They haven't flipped the switch to sell yet, or else you would see a lot more price declination than you have already. So I think the NASDAQ, if it can hold this base, even though it had this horrible, horrible first 4 months of the year, if it can hold this base, I expect a relief rally. Two targets for that are the zero point 0.5 fib here at 13,969 or the 618, both of them right near the top of the Wyckoff box, as you can see, at 14,243. And you have your 233 descending and your 200, okay? Lots of resistance there, but I expect some type of rally. I don't necessarily anticipate it being a forceful rally because I think next month is going to be bearish as well, unless the Fed pivots. If they pivot before then, all bets are off. But looking back at Bitcoin, let me give you a little market prediction, what I think could happen here. If we do get some type of rally, I anticipate we can come up. Now, you could falter at any of these levels, like 40K, right? This is why it's so important to understand how to read candlesticks, understand how to read market structure. But if we do come up, I think we could end up repeating this exact same pattern that we did right here. And by that, I mean, we get bullish momentum. We come up, we defeat 43. 46K is a hard resistance here in Gann. It's also the top of your Wyckoff. I could see candles doing something like this. Okay, I could see candles coming up, hitting 46 or hitting the top of Wyckoff there, failing, rolling over, trying to come back up, whether they come back up all the way or not, rolling over. And what is this, guys? It's a double top. We just did this. We hit 48,266, fell down, came back up, made a double top, broke the neckline, boom, 20% down. We did it over here, double top, broke the neckline, 20% down. This pattern happens over and over in the markets. I've been over this before. I could easily see this happening again at a lower level, right? Here's your swing high, 48,266. This is now at 46K. I could see this happening, and we'd be between the 200 and the 233, once again, repeating this identical pattern, this moving average sandwich that we just can't get enough euphoria, enough market momentum to break out of. And there's your next leg down, okay? That next leg down, I've given you targets before, but we'll be tracking them as we go down. But for right now, until we break this bullish accumulation pattern, which means we either just fall out of the wedge, we break our higher low structure, I'm tracking this for a rally to resistance and then a dump. Okay, that's how I am tracking Bitcoin. Let's look at some indicators real quick and then we'll wrap this video up. So looking here at the volume, obviously it's been low. It's been the weekend. Our volatility is tightening. Do you see this? The volatility is tightening. And looking here at our ATR, I want to see the peak like this that I have squared off here. And right now we've just been ping ponging between our two trend lines here. I want to see that peak breakout of this range. Remember, a breakout in the ATR can be a pump or a dump. Okay. So I want to see us break out, and that'll be our move, our incoming move. And right now, the volatility, it is tightening. So that move is coming. There is a move coming. And guys, I am biased to believe we pump to resistance and fail. Keep in mind, we can always just fail. Okay. If the bloodletting continues on Monday, Tuesday, or while the Fed's talking, we could just fall out and fail. You guys know the support levels. I've given you those in the videos, and you know the resistance levels. And now you know what I'm looking for as a roadmap. Guys, check out marketmakers.trade. Come trade with us. Our Twitter handle, check out BitGet. All of that information is in the video description. BitGet, they have a 200 Bitcoin, not a 100, a 200 Bitcoin tournament about to start. You can use our link to be in that tournament. It costs you nothing. It is anonymous trading, my friends. No VPN, no KYC. Go win some Bitcoin and join through our link to be included in all the future tournaments and get the bonuses. Have a fantastic rest of your Sunday. Talk to you guys tomorrow. Take care, everybody.